Good morning. My name is Giles Parkinson and we're with Cleantech TV. We're talking today with Michael Walsh, Executive Director of Hunter Hall Investment Management. Michael, thanks for joining us today.
You're very welcome, Giles.
Michael, give us a bit of an overview about where Cleantech investment, where the environment for Cleantech investment sits in Australia versus the rest of the world.
Well, speaking very generally, Giles, I think Australia is relatively well positioned as a hub for clean tech investment. It has been difficult in the global financial crisis. We need to say that up front, but I think looking long term, Australia is an interesting country from a clean tech point of view. The first point is that in the renewable energy sector, Australia is a great place to generate renewable energy. I mean, we've got the sun, we've got the wind, we've got the tides, and we've got some geomorphic potential there as well. So in terms of producing renewable energy, it's a good place. So that's a positive. I think over the years, Australian companies have developed some interesting intellectual property in clean tech generally. They may not have then continued to solely commercialise that intellectual property in Australia. It's gone overseas to larger markets and perhaps more friendly markets from a regulatory point of view. But we have had good research go into developing clean tech in Australia. But it's not all positive. I think it's fair to say that from a regulatory point of view, clean tech is, it is a negative. We do have uncertainty. We also have quite a bit of change in terms of the financial support for the sector in Australia. And the other important point is that, the Australian economy from a manufacturing perspective is quite small. And in order for clean tech to develop and grow and commercialise and for renewable energy to be used more, obviously it's going to need to be employed in a larger manufacturing base, and Australia is not necessarily the best place for those clean technologies to be used in the manufacturing process.
Okay then, so how does sort of clean investment sit in with Hunter Hall's sort of global investment strategy?
Yeah, well, Hunter Hall is a global stock picker, if you like, Giles. So we do look at stocks on a company-by-company basis. We're not index relative, so we're happy to find hunting grounds around the world. We're also happy to invest in Australia. So we aren't necessarily looking for clean tech as a sector or necessarily looking for regions in which to favour clean tech investment. So I'll say that up front. Notwithstanding, we are an ethical investor. We have a deep green fund, which obviously will favour clean tech. So it is a component of our portfolio. We've currently got 8 stocks globally that I would define as clean tech across the spectrum of waste management, renewable energy, and clean materials, and consulting in the energy efficiency area. So that's 8 stocks out of a total of 100 stocks, which is about 8 to 10% of our portfolio. So probably more than other fund managers.
How would you expect that to sort of change in the future, or would you expect that necessarily? Would it depend really on the pace of international policy development or a shift in business towards green investment?
Again, as stock pickers, we're interested in the prospects of each company more than anything. And obviously the climate in which that company is operating is one component of that. We don't necessarily like early stage companies with high growth potential and very uncertain cash flows. Being a value investor, we do favour companies that have established their cash flow profile. We like it if they're unloved and out of favour, but we do like them to already have established quite a high cash flow profile and a high return on their operating capital. So clean tech at a more mature stage does have the potential to meet those core investment criteria, and that's an interesting longer term perspective of clean tech, which has historically been seen as more populated by startup companies with blue sky potential. So I guess we're a little different to the other clean tech investors. We're trying to find companies that have established their business model, that have some commercial success, that are signing deals and are starting to generate cash flows. But we also want them to be a little bit out of favour as well. And that's pretty difficult to find, but we're patient and we've managed to find a few companies of that type.
What sort of policy measures do you think we need to support those sort of investments?
In Australia, while we do have a good environment for producing renewable energy, we also have a very cheap alternative in terms of fossil fuel-based energy, which is mainly coal. And in order for some equilibrium from an environmental perspective to occur, we do need a price on carbon. And I think a price on carbon, however it's levied, I'm not particularly fussed whether it's an emissions trading system or a carbon tax. I think that's more of a policy issue. But in order for the prospects of cleaner energy to improve in Australia, we do need a price on carbon on the alternatives. That's probably number one. I think from an investment point of view, that's absolutely essential. And, you know, it's interesting that there are other issues at play when we look at it from a policy perspective, the price of electricity, etc. But I think as an investor, we'll continue to call for a price on carbon to be implemented as soon as possible in Australia, driven mainly by the fact that energy is so cheap and it doesn't really encapsulate the price to the environment of that. The other tool that the government has available to support the sector is direct support through a grants mechanism. Unfortunately, we've seen a lot of change in the types of grants that are made available, and while various governments have set up sort of longer term funds to support certain sectors, they've tended to favour certain technologies or certain companies. Then a new government has come in and changed the nature of the grants mechanism. And change over a period of 2 or 3 years simply creates enormous uncertainty. So we really, ideally would like to see a much more settled environment where the government is quite clear about how it's going to financially support certain clean tech sectors, put those support mechanisms in place, and ideally not make it too much of a political issue where an alternative government might change that regime to favour certain sectors that might win votes in, say, the country, etc. Unfortunately, this has been such a changeable area that from an investor's perspective, we just can't rely on an expectation that certain sectors will be supported by the government, which is quite a shame.
You're speaking at the Cleantech Forum in late February. What will your principal message be? It's
pretty much a fringe early stage sector, reliant on ongoing, favourable credit situations. So in a credit crunch, a sector like this is going to be hit quite hard. I think we just need to accept that and get over it. And then I think the other message from our point of view is that as a value investor looking for established cash flow profiles, we need to get the message across that we're patient investors. We're not necessarily interested in start-up new ideas, but we are interested in the companies that have done the hard yards that are starting to achieve some success, and we'll be the sort of investor that will give them a kick along as they then emerge and grow. So hopefully that's an important and useful input into the investing process, a bit of follow-up capital that these companies can rely on.
Okay, Michael, look, thanks very much for joining us on Cleantech TV.
Thank you, Giles.